So the employer has to absorb at least 50% of the cost. This is what we call a minimum 50% employer contribution. If the employer doesn't ask the employees to pay anything, if the employer is going to pay the whole portion, then we have what's called a non-contributory plan. But in most cases, you're going to see that employers are going to split this cost with their employees. In the oil and gas industry, for example, it's pretty common to see the employer pay the whole amount, but most other employers, you're going to find that the employer and employees split this cost. So we see that the plan has limited underwriting. It has this minimum level of participation. We have the employees paying straight off their paychecks, and then the employer remits a check to the insurance company. And we have this minimum 50% contribution from the employees. From the employer. Plans are also non-discriminatory. How does this work? Well, let's say I'm an employer, which I actually happen to be, and I have some employees working for me who I know are going to use the plan more than others. Maybe I have an employee who has quite a few children, or maybe I have an employee who's beyond the age of 50. Maybe I have an employee who I know has had some health concerns in the past. I know that those are people who are more likely to submit claims than, let's say, a 25-year-old single person who's in good health. So my tendency might be to say to the higher risk folks, I don't want you on the plan. Well, I can't do that. This ties back into this minimum participation and this limited underwriting. That in order for the plan to be considered a plan of group insurance, it has to be accessible by every one of my employees. Now, that's not to say that everybody has to belong to the plan. There are cases where people would deliberately opt out of a plan. If I have the opportunity to be a member of a group insurance plan and my spouse already has excellent coverage, I might not want to pay the premiums associated with being a member of the plan. I might not be excited about paying my 50% share, so I might opt out of the plan. But that's my decision as an employee. My employer still has the obligation to make the plan available to me. So the plan has to be non-discriminatory, and this really falls out of the human rights legislation that we use in this country. So we cannot select who's going to belong to the plan. Now that leads to another term that you have to be somewhat familiar with in order to understand group insurance, and that's anti-selection. Anti-selection refers to the idea that the insurer takes on a risk and then suddenly they see a large number of claims, an unexpected number of claims from the plan members. That's anti-selection. That is, the insurer hasn't had the opportunity to choose who's insured, so this idea that anybody can submit claims and that we had little or no underwriting associated with joining the plan leads us into this anti-selection problem. So insurers do put some limits in place to avoid anti-selection. When we look at orthodontic benefits a little bit later on, we'll see some anti-selection measures. It wouldn't be uncommon, for example, to see an insurer place a restriction on plan members that for the first year of the plan, there can be no orthodontic claims. This prevents us from having a situation arise where we put a plan in place and in that first year, 10 employees all take their kids to go get the braces they've been waiting to get. We can see that that would be a problem for the insurer. The insurer would have a large number of claims to suddenly deal with, and it would be a problem for the employer, because what happens with most group insurance arrangements is that if there's an unusual amount of claims experience, that is a lot of usage of the plan, then the premiums are going to increase commensurately. So we want to avoid those situations where we have a sudden unexpected surge in claims. It's going to hurt the insurer first, and then the insurer is going to pass those costs on to the employer. And then, if the employees are paying a portion of the plan, we're going to pass those costs on to the employees again. So this really covers our basic introduction to group insurance. We will continue working through some other ideas around group insurance, some ideas around the coverages that are available under group insurance, the structures of those coverages, and a little bit of discussion around the premiums and premium structures for group insurance. I hope you'll see fit to join us for the next set of videos where we'll discuss group insurance in more detail. Thank you very much.